Following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m. Eastern Time. And thank you to our great hosts. Let's look at the market. The Dow is up fractionally, up 0.92. Well, it's up 1 at 23,540. S&P is up 1.5 at 2589. Did I say that? Yep, 2589. The comp index is up 8 at 6773. The VIX is still way down. It's way down below 10 at 954. It's actually up 40 cents, but it's still much lower than... No, wait a minute. Oh, what am I looking at here? VIX on that one is 954. That one is 10.11. All right, let me just type this in here. I want to get that right. VIX.X. And the VIX at this particular time is at 954. Up 40 cents. Yesterday went down to, oh, that's right. I forgot about that. Yesterday hit 8.99. And this is going to be a very interesting week. I'm going to go through a whole bunch of things. Actually, I'm going to treat this a little bit more like my Friday session where we do a lot more on the Chapman wave based on what I'm looking at. So let's just keep going. So the VIX is very low. The S&P, so for the, let me do it this way. The Dow trading up $1.64, 23,540, made a new all-time high today. It's extending this leg G/C. The MACD is negative. The stochastic is good, very good at 93%. On balance volume is starting to show a little bit of a tilting to the right as it screams to a new all-time high, actually, on balance volume. But it is in the overbought area. Now, overbought can stay overbought for a long time. I made a very great distinction in my methodology many years ago. If you look at any textbook on technical interpretation, you will find that invariably it says over 80% in the stochastic is overbought and under 20% is oversold. I've switched it around completely, and I say any price that you're looking, any tradable that you're looking at that's trading with a stochastic over 80%, that's what you want to see if you're long, because that is going to give you buoyancy. That is buying pressure. Under 20% says, hey, be careful. Yeah, this is selling pressure. It's not oversold. Oversold. The implication of overbought means it should turn around at any point, and the implication of oversold is, ready for a turn to the upside. No. These things can stay in that range for a long time. The difference is here that on the on-balance volume, we are in territory that we've not been before, and it is invariably getting really close to at least a consolidation in the price that you're following at minimum, especially with the MACD. However, price is the arbiter of the trend, and we're way above the 9-period moving average support in the Dow of 23,430. Now, I'm going to go through this. The weekly chart is still very strong. This is a 120-minute chart. It's gone to a leg D right here. D is where in the Chapman wave methodology, other things can happen, where you're going to start making decisions about staying long or going short. And we're at D right now. So parameters to watch: any slide in the next 2 days below 23,390. I'd say 23,420 to 23,390 area, touching that area and then going below it in the next few days would be quite negative. Holding here, holding above 23,450s, that's 90 points down. That would be very good support. Starting to go below that, you've got to be a bit careful. The S&P, SPX.X, the S&P 500 in leg G/C, same as the Dow and the cash, made a new all-time high today. The MACD, see, this is what's so fascinating about this market. As there's been an internal correction in one of the technicals, either the MACD or stochastic, the price holds very well. And now look at this. If the MACD crosses positive, that could be good for another two days or so of upside activity. So here we are on the cusp of either deflecting lower. If there's a reversal to the downside in the S&P, which is trading at 25.89, up $1.76 right now, suddenly turns around and starts to go down 2.5 to 3 points by the end of the day, then you got to be careful because that MACD will be deflecting lower. But I'm going to emphasize this again. I'm going to emphasize it over and over. The weekly and monthly technicals of both the, let me now get rid of this. The weekly technicals in both the monthly and the weekly charts are still extremely strong in both the Dow and the S&P that we've looked at. Look at the QQQ series. This is the PowerShares QQQ Trust series based on the Index 100. I said to subscribers, and over the weekend I sent out a lot of charts. And what I was saying is that the Qs at this point at 153.52 all-time highs. This, when it broke down on Thursday, yeah, must have been Thursday intraday. During my show, I said we've got to watch this closely because at 150 in the 150.70s, if the Qs start to break the 9-period moving average, then we've got to consider this has the potential to make an E and an F like a rogue wave and then turn down. But the way it's acting now with the MACD still strong, the stochastic still at 91% says, you know what? We could go chop, 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 and we could still have this as an F/B, alternate counter the Chapman wave, because the technicals are still so strong that you could have a pullback maybe tomorrow, and then a new high, and then a pullback, and then maybe by Friday or Monday we make new highs. So what I'm looking at here is I'm saying the weekly chart and the monthly chart are still very, very strong. The 120-minute chart, I don't know if it's just started a brand new move to the upside, but if there is a push into the 154s by later today or tomorrow, I have to consider that the Qs are going to go a little higher before they start their digestive phase. And I'm now going to get rid of this because I wanted to show the distinction on the left side to the right side when this was breaking down. Not breaking down right now, still very strong. Do not want to step in front of this freight train just yet. So let's go to the IWM. So over the weekend, I said, oh, so many charts. And we were looking at all these different things, that there's a divergence between the new highs that were made in the Dow, the S&P, the Qs, the SMHs, the semiconductor index sector. But there weren't new highs in the IWM, which is lagging badly at 148.69, hasn't gone above the 150.66 high of the 9th of October. It's just stuck in this range, hasn't broken down, and the technicals have been falling and falling, but the price hasn't broken down. That means when the technicals strengthen, we've got to watch to see if there's a move to the 149.90s. That would be very good in the IWM. A pullback below 147.80 would say, this is lagging and it's a big divergence. IWMs are starting to fail. We're in the middle. There's nothing you can do right now. If you're short, you can hold your short position. If you're long, you can hold your long position. Those are the parameters I just gave you to say, okay, now you've got to be careful. The NYA, this is the New York Stock Exchange, very broad 2000-ish New York Stock Exchange index. This is running today. Unlike the IWM, it's up 17.34, 12,390. It needs to break above 12,443, the all-time high, to actually break out. I wouldn't call that a G. I'd call it whatever the letter is in the daily. And the weekly chart is still very strong, as in the monthly. So we will be back. We'll look at the commodities, etc. We'll look at bonds. We'll look at crude oil, which is soaring. And then I'm going to answer some of the questions, very pertinent questions. I'll be right back. And, of course, one of our dentists is telling me that I might have missed a peak.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just correct something. We've got some terrific Chapman Wavers in the den. One in particular always corrects me, and he was absolutely right. On the chart that I showed of the Dow is not the chart that I showed for my subscribers over the weekend. That's the one in great detail, the 120-minute chart. That is a leg E. If there's no new high bar in this 120-minute chart, it'll be a peak E. And it's so far, I'm calling it a Chapman Wave 505. Maybe the day's too young to do that. We'll see. And okay, I just wanted to correct that. We're E and not a D. Now, here's something that I wanted to go through. If you look at the gold, nice move up right now. Held the 200-period simple moving average, the light blue line there. Spiked above the 200-period exponential moving average, the orangey color moving average right there. And then the black 9 EMA at 1276 spiked above that. What I had said to subscribers towards the end of last week and going into the weekend, and then during the weekend, is that I'm anticipating there's a chance this week that we see some kind of an opportunity for the market to have a price deflection in some of the best indices, but that the way crude oil had been acting, a lot depended on what happened. And then, of course, we had this whole thing in Saudi Arabia. I could talk a whole bunch about it, but I'm not going to do anything right now. Maybe I'll bring it in during the week. But what's really interesting is that crude oil at this particular time, so let me go back to what I'm saying, that because of the dollar index, DXY, at a peak C at 95.15 about a week and a half ago, and worked very hard to try to get above that. Today's high is 95.08, so it missed it by 8 cents. And we've been long since the very low of this 35-week up, 35-week down, 2-year, a year and a half consolidation, going all the way up to the 100 and what was the high? 103, coming back down to the 91s. And I've been saying that I think that this is the moment where the dollar should pull back a little bit. I don't think it's changing direction. It should pull back a little bit. And maybe gold will have a bounce for 3 to 5 sessions as the dollar consolidates. That would imply that the euro, same thing, EUR, USD. And euro, you see, has not made a new low. But the chart of the week, he says, you know what, you could bounce, but you still should be doing more testing in the 1.16. It's at 1.1607 right now. So there's that H pattern, and we broke down. Now we're trying to make another arch formation. And if you look at the USD JPY, which is the yen, dollar yen currency pair, it's spiked up to a G/C right now. I don't know if it's able to get to a D alternate count. But in the meantime, that is a leg C in the weekly chart, even though right at this moment, the same day that it hit the high, it's at the low, almost the low of the day. So we're going to have to be watching this very closely. But what I wanted to say is that within the context of markets, it is crude oil at this particular time that had my focus for quite a while. Now, one of the reasons why we are in, and now this goes to one of the questions. If I go out of order, I'm going to miss something. So let me just say, it is a question. I'm going to get to the specific question in a moment. But in the meantime, this is leg E up at $1.42 at 57.05 in the continuous contract. It spiraled above that 55.90s, 56 area that on the left side that was really our target for leg D. This is still leg D in the weekly chart, and that monthly chart has made an arch formation that kind of went to a lowercase m, and now there's a move up that says it should try to take out the arch high. And in the continuous contract of crude oil, that would be the high of June of 2016. That's at 60.09. That changes. So the real thing, unchanged one, would be the USO, which is the United States Oil Fund ETF. Is that an ETF or an ETN? It says ETF, doesn't it? Or is it a fund? No, it's just a fund. Whatever, I'll have to check. I think it's an ETN. It says that the target would be 12.45, and right now the high is 11.51 on the day, and it's in leg E, so it might take a while before it can get there. But in the meantime, back at the ranch, and now I can get to this next question. Someone asked me about the DBC, which is something that we've held for quite a while, since August. And now what is it, October? And we bought it at 14.82, and right now it's trading at 16.49. That's a very, very nice gain. Why? Because my impression at the time was that it had a greater weighting percentage-wise for the oils, all the different kinds of oils in this particular commodity index tracking fund, and that it would be give me a beautiful left side, right side price time match in the daily, and then the weekly, well, it's broken to a higher high, recovery high that is, in a shorter time period, and that's very bullish. And the MACD and stochastic in the weekly is very bullish, and so is the monthly chart. Now, so the DBC in leg, this is where a lot is going to happen with crude oil. A lot. Yes, I know Coda in the Den says his monthly on crude is in leg D. I'm going with the USO for the trade station chart, which matches exactly the USO and crude oil charts match exactly. And I do know of some platforms that have the chart that you have, which says that you have gone to higher highs. It hasn't been that way for mine. I'm just sticking with mine. It's not really changing the outlook at all, because there's a build-up that the weekly charts are very impressive in doing. So that's the way I'm looking at it. Crude oil should be, it's very close to maybe taking a breather, but when you get these extraneous events, these outside events, that's like, Iran or whatever it is, it affects the crude oil. So we're going to be watching this very closely. Why? Because crude oil looked like it was in leg D, so that says, all right, start being careful, and it was the second buy mode. The last one went to an F. The dollar had made a peak E, and now is pushed higher, but it hasn't. It's got like a peak C1, C2. So it hasn't gone above that peak E of 94.27 in a brand new buy mode, because only a peak C could be an alternate account FC. I'm just calling it a C for now, and I think it'll go above 95.15. That's the way I'm looking at it. If it does that, it goes to leg C in the weekly, and that really helps the monthly chart. But I think there's going to be a lot of resistance, and that's what I was looking at. And it coincides with the TLT. TLT, a beautiful up move. Single leg A, though, going from the 122 to the 126 level. I say to subscribers, if the TLT, the T-bond, Lehman 20-year T-bond fund actually spirals into the height 126s, that's when we might see the market start to pull back. A couple of questions in the den. Basil, you still think we get a pullback on MRO? Let me just do that because it fits into the category I'm talking about here. MRO is Marathon Oil. I did some work on this over the weekend, and my conclusion was that to be a little conservative, I have to call this, there's a chance that it's a single leg A up in the daily, but actually the more work I did it, I said I would consider that this here was an instant restart, and this is really F/B, and then you get a sub A, B, C, and now this is a leg D. And I want to just treat it as a D, very strong D, that not have the look of a single leg A, although kind of it does, but that the next pullback is really what we need to be looking at. Now, what I had said on Thursday and Friday is if you're looking at MRO, looking at longer term, you must think about starting at least a small position because it's looking very strong. And then we'll see if you can get a stronger position between 450 and 1390. Now, up 47 cents at 1605. This is the breakout. That's what I was afraid of, saying start a position then. So I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So let me just, for one, I don't want to do these things too quickly. This has the look of a single leg A if you look at the stochastic and the MACD in MRO trading at $15.99, up 42 cents. But I want to be as conservative as possible, and I want to look at this that made the peak F and then basically went sideways. And that peak F really is, if I think of it more like an instant restart, is an F/B. But then you have these under from the starting point after that D. You've got a gray A, a gray B, and possibly a gray C, or is that just a regular? 14, 15, and 16, huh? No, 14, 14. Good. That's what I was thinking. So it's A, B, C. Now it is combined as a D, but Ds can go to E and an F, or it could restart. Most important thing is the stochastics at 95%. That's fantastic. The MACD is very good. It has almost the look of a squash pattern, but it's a little too wide. So I'm saying, you see the rectangle? 1487 is extremely strong support in this particular stock at this time. And you've got plenty of time to make up your mind if it's a D or an A. The difference is if you say it's an A, you can buy it here and you can just say, I'm going to keep adding to 1487 until I get a pretty good position, because it should go to a higher leg B or C, even in the weekly charts. So the most important thing about Chapman Wave is you want to know what your last letter is, the greatest accuracy with your last letter. And in this case, there are a couple of alternate counts, but it is the MACD and stochastic that are suggesting you've got time to make a decision about that. You don't have to rush into it. This is a great looking chart. That's the reason why early last week I said I like it. The best would be to try to get it at 1430 to 1380. But either way, the person asked me, I said, I think this is a time that you could just start a position right now, because if it keeps going up, you want to be in and then still be able to make other decisions. I feel strongly that that's pretty much still the same thing, because the weekly chart is very strong. All right. Now I want to talk about what the question was. Statement, actually. So I get an email after I sent out the this particular chart right here. This particular chart right here. This is my newsletter every Saturday, Sunday. I'm already sending out charts for Monday, just 12, 14, 16, who knows how many. But this is where we've got time. We want to think about other things. It might be what we don't own, we want to own. We're not interested in owning, but it's such an important thing. We need to look at it. I send them all out. Right. So this is the semiconductor market vector, semiconductor ETF, the SMHs. And what I'd said is that it looks like an F right there. The MACD is good. Stochastic is good. On-balance volume is extended, but still very good. But that weekly chart has gone with very good technicals to a D/C. That's very interesting. And the monthly chart is still in leg D and very good. And the 120-minute chart was only in leg C. And that's the way I did it. Why? Because I want you to explain that what we were looking at is there was a chance right there that we could pull back. There was even that red candle there, and we didn't. Even the technicals at that point were weak. There was stochastic was weak. So here's the question. Very good question. The question right was statement. Statement is, Basil, I'm looking at your charts of SMH. It's really scary and amazing how this semiconductor incredible bull run didn't get realized by the Chapman wave. There must be a new formation that was formed this summer where you can realize it as a bull, not a bear chart, next time it forms. Question. So this is like a statement to say, wow, this has been such an amazing move. How come you just didn't go long and stay long? So here's the answer to the question. I was looking at the daily charts, and I kept saying weekly charts, monthly charts, very strong. So the question is, if you're looking at the tide, in the larger tide, you should be able to put up with some downside move, a percentage move, and say to yourself, I want to be increasing my holdings in this because that weekly chart is just so strong and the monthly chart is still running higher without even touching the 9-period moving average. So to do that, I like to look at the shorter term charts. And the shorter term chart of the SMHs, you can see how many times it looked like, aha, this is it. There's that doji candle. Everything fitted back in the week of the 19th of September. Everything fitted. Doji candle. MACD's about to turn down. Stochastic didn't give you a confirmation on the pullback. On-balance volume was already turning down a day before. Wrong. Why? Right for a few minutes and then kaboom. It just turns, well, a few days actually. Maybe a week. And then it turns out. And then it broke out. But look what happened. You see when I'm there, you see that on-balance volume is becoming extremely overbought. What I did ignore, much to my regret, was that the MACD was still very strong. It's a very unusual pattern, but that doesn't matter. The green line, the 9-period differential, was still way above the red one. So it was my shorter-term thinking that really disturbed and eliminated the overall bullish picture that I should have been looking at instead of micromanaging and trying to short. And most of the time it was a small loss. But it adds up, and it's upsetting because you're missing a big move. Who wants to be short even for a 5% or an 8% pullback when in fact you're screaming to the upside from 85 to 103, 20%? And that's really the issue. And I think that's an absolutely legitimate question. And my answer is very simple. The Chapman wave methodology did its job. My micromanaging, trying to pick the short for a quick pullback, and then I want you to flip to the long side was just dumb. It was silly thinking, because the way the overpowering strength of the leading sector, and I spoke about this for the whole year. I've been saying semiconductors led us up, and then I said, okay, semiconductors should lead us down. Was that September high? And they absolutely did, but just very briefly, a week and a half or something, right? And then it pushed higher. And in fact, if you look at the September week of the 9th, that high of 89.72, look at the weekly chart. It went down sharply from 89 to 80. So that's 11%. That's a pretty big move for this particular index. But then it shot up, and then it stalled and looked like it was a comeback down again. And then out of the blue, what should have tipped me off that I was totally wrong was the Chapman wave left side, right side price time match in this cup formation says that if you break out of the left side high in a shorter time frame or the same time frame, be careful, because that should go to a D. Hey, we're in a leg D. But wait a minute. D, this is actually, it's a D/C. I'm going to call it for now a C, just to show you something, because it would have to be a D if I was looking at it from the point of view of this being the low right here. And that's the low of April. Then that would be A, B. Well, it would still be C. All right, everything says C. So here we are. We're in leg C to the upside, and that says the semiconductor index is still strong. Well, it coincides with the relative strength. This is the red line here in the weekly. The MACD at 98%, 98.68 is $1.32 off 100%, which it never reaches. And the MACD is still expanding. So that was very subtle. Even my move on Thursday and Friday, which we missed, thank goodness, because I said at 1 o'clock, if it's doing this, let's go short, and we didn't. So I have to say, you're 100% correct in bringing it up as if to say, wait a minute, why weren't you long? And if you wanted to go short, you could have said, hey, just like the Dow, you've got this very short position that you're using as a trade, but you've got your more intermediate term long from the 22,300 level. Why didn't you do that? And the answer is, I don't know. It's just dumb. The waveform, even now, is correct.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, so just to follow up on that, and I know that this is probably not the best place to rinse one's dirty linen or whatever it is. But I know that we've made enough fabulous calls that I do it for myself, for my own learning experience. When I'm wrong, I'm wrong. I like to just say straight away, wrong, and that's the best thing. So here's a follow-up question, and James says, hi, Basil. No, he says, hello, Basil. I'm a long-time subscriber of yours and daily listener. I've noticed that you've had a difficult time calling the top for the semiconductors, shorting and getting stopped out for months, similar to your experience with the IBB back in 2015. Aha, good point. That's exactly what happened with the IBB. And then we got almost the exact top, and we got 111 points to the downside in the IBB. So when it works, I remember the same thing happened with the housing sector back in 2005, and we finally got one of the shorts. I think it was Toll Brothers. I just can't remember offhand. We made a lot on the downside, but it took a while. Certainly did. So thank you for bringing that up and reminding me. I have a substantial short position using the SOX, SOXS, with the bases in the low 20s. As soon as I sell the short position, the semis will probably pull back. Will the semis continue up due to Bitcoin effect? Now, I cannot. I mean, Bitcoin is at B right now, GBTC, and it's making a peak B. I think it's still going to go higher to a C and a D. This is an extraordinary. This is the tip-off to say that it is the part of the second phase of the coda formation that we're forming in the overall market. This is where we got the start. It'll be this. It'll probably be the marijuana stocks or something like that. And we will get the sexiness of the 1999-2000 period at some point. I'm hoping it's not now going into March. I have a left side, right side monthly time cycle. I just hope it's not now. I'd love to get a pullback now and have it just keep extending. We could go through each sector like this, like the semis. I don't mind, but we'll talk about that. So going on. Will the semis continue up due to Bitcoin effect? I don't know. I don't know about the Bitcoin effect. I can take a little more heat, but if the semis are going to go up by more than 2 to 3% from Friday's close, I will need to sell a hedge. If a caller to your show had this dilemma, how would you comment? Thanks, James. So, James, this is exactly what I'm going to do. Let's look at the SMH right now as if this is a brand new call. Caller calls in right now and says, Basil, how much percentage do you think there's going to be to the upside? And if so, what would you think would be the upside resistance? And then what would tell you that this semiconductor index is going to decline and it's going to be impactful enough to be a sustained decline? That's really what the question should be. So now let me do this. I'm going back to my D/C in the weekly chart because now it's very critical. I want to use every bit of evidence that I can And the evidence is that that instant restart in so many weekly and monthly charts over the last 3 months have re-included the D as a chance for an instant restart, Chapman wave instant restart, and become very important. And that becomes the instant restart right here, back at D on February, the week of the 24th of this year. And that was at 77.82. And the reason why I wanted to include it is the low was 75.50 and the low was 76.25 on the 14th of April. So that makes it a legitimate potential peak D. And then when we made that, what I call the G top at 89.72, which worked out just great on the week of the 9th of June, the pullback was way higher. So that makes a legitimate case for an instant restart, and that this could not be necessarily an E, but an A, and that's a B, and this is a C, and that's a D that we're looking at right now. So A, B, C, and this is D. So now I can start the analysis. And what I'm going to say is 3 things are happening that are very important. The stochastic is still at 91% good, but way lower than it was. That's just a tip off to say be careful. The on-balance volume has gone to an A, B, C, it's in leg D, even though the price is only in an F. So it says heads up, and it's kind of in overbought territory. The MACD is making the M formation in the daily with the left side arch and the right side arch, except that that arch is still expanding. Today's only Monday, but it seems to be expanding. So I would have to say, James, I'm going to just be as strict as I can. I'm going to say that even you can always get back in. I know it's not fun, but capital preservation is you can ask anyone in the business. When they lost their capital, it took a long time if they ever got back, and if they got back again, they learned to appreciate what capital preservation means. You can take a 10% loss, you can take a 13, 14% loss. When it gets bigger than that, it just sits on your head and it messes you up for other things. So here's what I'm going to say. In each of the cases, I had a very tight stop for anything that I have. Even here, I was shorted 101.28. We took a minus 1.04. It's about a 1% loss. Here, we shorted at 98.99 on the 18th of October, took a minus 1% loss. Those are small, but they do add up. There's just no question. But look at this. It's at 103.59. I'm in the game. I'm not out the game by saying, oh, geez, down 4 points or 3 points. So that's the way I look at it. Other people don't. They believe if they made the decision, they want to stick by it because they made it on the grounds that they're comfortable with. I'm saying, hey, look at the way it's held. The 9-period moving average uses it as a springboard. We haven't closed below the 9-period moving average since the 26th of September back in the 88, 89 area. I'm not going to fight this. So here's what I'm looking at. I believe that this is going to be a very critical week for a number of things, except for one thing. Going into Thanksgiving often, especially if the market survived any September, October downfall, which it hasn't had, it's usually pretty good going into the November Thanksgiving period. So we've got a number of things going, and I'm just going to make it real simple. At 103.60, at this point, I feel comfortable in saying it's a leg F, but if there is a pullback anytime this week and goes to like 102.60 and then another bounce with a new high, I have to reconsider that and say that's a new G/C and it should go to a D. That's just, oops, you don't know where the price is because I'm only giving you letters, I'm not giving you numbers. My eye says that stocks that get to a 96 invariably go to 103 to 106. Well, 106 is another 2.5 points higher. So that would give you your 2%. So I'm going to be very strict about this. I believe that if you were to start, if someone called you right now, I would say, I would not start the SOXS right at this moment. Remember, it's a fresh thing. I'm waiting for other things to happen. Look, I've got a leg C in the 120-minute chart. But in this area between 103.80 and 104.50, it is exactly where on the numbers business I would start thinking of a short side. only short term. And that's what I kept saying right through this whole thing. Short term, because the weekly charts are very good. Look at the doji candle, which became a halfway station for the move to the upside, the candle of the 22nd of September. So we've got one more segment coming up. I did want to spend time on this. I'll spend a lot more time on it tomorrow because I know a lot of people are looking at this, but I'm going to go to some of the other things. So I'm just saying, be real careful. You can always come back in. So make it
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, so in the remaining time, don't forget to stay tuned for Steve's show, and of course, Dave White and Tom O'Brien. So, the questions came in, and let me just go through them one at a time. HYG, this is actually, HYG I look at, but the work I used, typed it into the den by mistake. HYG, this is the high yielding bond fund. Made a peak D, double top, and it's down. It went up in the 88s, and now it's trading at the 87s. That sounds like nothing, but in chart formation, especially with anything to do with yields, these are big numbers. But it's J and K that I do most of my work on. J and K nearly at the 200-period exponential moving average of 36.96, trading at 36.99, few cents away. It made a peak E in the daily. That was right there on the 23rd of October at 37.35. So it's down only not even a point, but you can see these are percentages and these are yields. So these turn out to be big numbers. Peak C, and it could be a C minus. I think that yields are going to be coming down a little longer. Maybe I'll talk about it today. I spent a lot of time over the weekend with the looking at these charts. So let me just show you something here. The TLT, the TLT is in a very extended move to the single move up. If the TLT goes to the 126.80s or higher, I do think that we're just about to get some kind of a pullback in the market as money goes out of the stocks and goes into the safety of bonds. That's just my thinking here. The next question was DBC. DBC. Oh, I did DBC because we own it at 1482. It's trading at 16.50, doing fabulous. This is part of the oil sector, big move up. DAX, let me just quickly do the DAX, DAX, same chart, wrong numbers. Dollar, J, DOW. Oh, what am I talking about? DOW, there we go. Oh, that's a break. So, I never had a chance to do a Bank of America, which we own, BAC. No, can't do it, it's too quick. So, XLF has held very well, but I think that we were looking at yields, and that's it. I'll talk about it tomorrow. Yields and the XLF, the financials, they kind of go together. I'll talk about SLB tomorrow. Have a great day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.